active versus passive investing. What does it really mean? Let's define active investing. This actually involves direct involvement in the acquisition and the management of your investments. In other words, optimizing real estate properties. Investors that are responsible for finding deals, securing the financing that goes with the deal, and also overseeing the property management to ensure, at the end of the day, profitability. In other words, in the day-to-day running of the asset, to make sure the investment or the business plan comes to fruition. That's actively getting involved in the investment per se. Now, on the passive side of things, defining passive investing, this is when investors deploy capital into the hands of real estate investors, or rather, opportunities are there, and practically what you just do is deploy capital into opportunity without managing the investment. In other words, the day-to-day operations of the property, the investment, it's not within what you will get involved with if you're a passive investor. If your part of things is investing passively. So passive investors rely on professional managers to handle assets. The performance also too, while they reap the benefits of the cash flow and appreciation. Sometimes it's always the best way to get involved in investment. If you don't want to bother yourself about the ins and outs of a daily management of a property or an investment, in an apartment investment, you want to be on the passive side of things. So let's compare the levels of control, efforts, and risk involved in each of this approach. Like I said, active investing versus passive investing. When it comes to active investing, the levels of control is pretty much very high. The levels of effort too is high. So it translates into high potential returns. Now, when it comes to passive investing, there's lower control. Like I said, the involvement is lower effort, and pretty much you get into it with a stable return. The returns are stable.